Could you try turning your camera off and on again to see if that starts it up properly for us?
Okay.
Thank you. Are you on a laptop, or have you got something else that you're using?
I have a laptop, but I'm also using Blackmagic.
Okay. So you're using Blackmagic capture card to bring the camera into.
It's a
There you go.
switcher.
You're on. Fantastic.
Yeah, but that's the wrong camera. That's the wrong camera.
Oh, I see.
And you're not seeing the camera, are you?
No, we've got a frozen image now. You could try in device settings, just going in and, or actually, if you switch to the Blackmagic, maybe just turn camera off and on again. Hopefully, it picks up that capture card properly.
Okay, I'm going to change the video cable, okay? One moment.
Okay, thank you.
What's your name? Okay, are we back?
Charles, we've just got. We don't have an image at the moment. Don't have video at the moment.
How about now? How about now?
Yes, there we go. That looks fantastic. Okay, so just while I've got both of you, so the way this is going to work, in a moment, when we actually start a conference, there'll be two videos. One of them is not that interesting for you guys. It's a housekeeping video for WTW's office. The second one is the DF Summit introduction video. That'll play. Then there's two people that'll be speaking before yourselves, and then Michel will introduce you, and then you will appear on the screen. So before then, if you could stay on camera, you don't need to mute your microphone or anything. Just leave the camera and the mic on, and we'll only put you on screen and make you heard when you're actually due to speak.
Okay.
Charles, am I correct in thinking you've probably got an external microphone as well, and we should probably do a quick
Yes.
check? Can we do a quick
Yes,
sound
yeah.
check with the PM, please?
Yes.
I can give you whatever you want.
Oh, you sound fantastic. That's perfect. Thank you very much.
Thank you. Thank you.
Okay, I'm going to turn my camera off now, and I'm going to go on mute. And like I say, if you just leave your camera on or the vision mixer on, and if you leave the audio, leave your microphone open, you won't be heard in the room or seen in the room until you're introduced. So you'll know when you're about to be seen in London.
Okay.
How's that
And
sound?
we should, just to confirm, we should be hearing music, right?
You should be hearing music. Yeah, that's going to stop in about 2 seconds.
Thank you.
All right, lovely. Charles, thank you very much. PM, thank you very much, and we'll see you after the show. Thank you.
Thank you.
Welcome to 51 Lime Street. Before your event starts, please listen carefully to this important safety announcement. In the event of the alarm sounding or a tannoy message being transmitted, please remain seated and follow the instructions of the event security officer. They will be identified by their high visibility jacket. If we need to evacuate, please follow the event security officer who will lead you out via the relevant fire exit route. Once outside the building, any attendees who are based at 51 Lime Street should follow building evacuation procedures and disperse at least a block away from the building. You will be updated via ENS, the emergency notification system. If you are a visitor to 51 Lime Street, please remain with the event security officer who will keep you updated and inform you when it is safe to return to the building. Thank you for listening.
Is it time to rethink insurance? By protecting lives, livelihoods, and assets, insurers contribute between 5 and 5.5 trillion US per annum to global financial resilience, the largest financial contribution to resilience globally outside of governments. Yet today's economies and societies are facing a myriad of unprecedented transformations and uncertainties, such as increasing geopolitical tensions, financial constraints, a spiraling climate crisis, and with profound implications for availability, affordability, and access to insurance, particularly for the most vulnerable. How can we ensure that insurance continues to be a cornerstone of resilience and development? The Insurance Development Forum and our members and partners are committed to collective action. We are rethinking insurance. By investing in prevention to reduce risk, by deepening financial protection, and by provoking action. Together, we can ensure that insurance continues to be a cornerstone of resilience, stability, and development for people, planet, for all. Time to rethink insurance, because insurance matters for us all. IDF Summit 2024. Prevent, protect, provoke. Join the partnership, lead the solution.
So good day, Excellencies, Honorable Ministers, Deputy Ministers. We have a few amongst us today. Chair of the IDF Steering Committee, and also our Steering Committee members, and also Operating Committee members. Members broadly, our partners, everyone. Welcome to the Insurance Development Forum 2024. I'm particularly delighted to see so many familiar faces, but also some new faces. My name is Ekhosuehi Iyahen, and I'm the Secretary General of the Insurance Development Forum. For those who are less familiar with the Insurance Development Forum, it's a public-private partnership led by the insurance industry and supported by international organizations, specifically co-chaired with the United Nations Development Program and the World Bank Group, respectively. As an institution, we have as our mandate to optimize and extend the use of insurance and its related risk management capabilities to build greater resilience and protection for people, communities, businesses, and public institutions that are vulnerable to disasters and their associated economic shocks. And in so doing, to also contribute to the Sustainable Development Goals. Before I introduce our excellent speakers who have so graciously agreed to join us for this convening. And I'm probably no doubt the reason why most of you are here this evening. I must first and foremost acknowledge our host, WTW, Pamela Thompson Hall, member of the IDF Steering Committee, CEO International, for hosting us in this venue tonight. Also apologize for the shift in venue because there was an incredible demand to attend this event, which also meant a slight change in venue. So really thank you for your patience and really being sensitive to some of the shifts that were required to make tonight happen. Secondly, I just want to use a few minutes to offer some personal reflections on the theme of the summit. And the theme being, obviously, why insurance matters: prevent, protect, provoke. Beyond all the reasons that we saw in the video, it is ultimately about people and communities. For the industry, it is also a matter, it is also important, and it also matters because it is an issue fundamentally of relevance and opportunity. To have this conversation here in London at this time also holds significant relevance and importance. Those of you who would have reviewed or taken the time to review the IDF welcome pack would have noticed a page in that pack with some insights into the history and of the City of London and its role in informing the beginnings of the modern insurance market. This historical fact matters. Michel might dispute. We'll wait and see. It matters at this moment because being right here in the heart of the industry is an apt place to be with all of you. And earlier today, we had an exchange with a group of representatives from countries who have traveled all around the world to be here over the next week. It's important to be here to have this conversation with all of you, to provoke us into reimagining what insurance means at this time, given the current challenges we face, but also importantly with a view to the future. Turning to the objective of this evening, we have three incredible leaders who, as I said earlier, have agreed to help us unpack the theme of the summit. They bring together perspectives from the political, private insurance industry, and also supervisory perspectives in a way that I know will be thoughtful and nuanced. They bring together perspectives that I know will not simply shape the conversation tonight and over the next few days, but importantly will also inform the actions that we take forward. The three leaders are, of course, Michel Lie, IDF Steering Committee Chair, and also Chair of Zurich Insurance Group, our host, and who I've had the great pleasure of working with over the last few years. I've learned a lot about insurance, but beyond insurance, history, politics, football, and rugby. So thank you, Michel, for being our host and just your incredible challenge that you always pose to us at the Insurance Development Forum. We obviously have Jonathan Dixon, Secretary General of the International Association of Insurance Supervisors, also no stranger to this community, and who has spearheaded a number of unprecedented shifts, I think, in the supervisory community in bringing to the fore the issue of protection gaps. And last year, we saw the launch of the IAIS call to action on the role of insurance supervisors in addressing natural catastrophe protection gaps, and also just your willingness to be open and collaborate with us around this agenda. So welcome, Jonathan. And last but no means, we also have as our keynote speaker tonight, Her Excellency Mia Amor Mottley, who is the Prime Minister of Barbados. The Prime Minister will join us virtually tonight, but also who is someone that I think we must acknowledge has been a driving force in bringing to the fore a sense of urgency and some key shifts when it comes to the issue of addressing the climate crisis and also some of the solutions that are emerging. And in many ways has also been a voice from developing countries. I have to admit as a Barbadian, as well as a Nigerian, I always own both citizenships. It's really a pleasure to have the Prime Minister here with us. Few people may not be aware that our first guest when we had the IDF webinar during lockdown on the 15th of July was actually the Prime Minister of Barbados. And thus she is no stranger to this community and to this issue. And so we really thank her for taking the time to join us for this conversation. So the objective of tonight is really to create a moment for learning. It is to create a moment for debate, perhaps a little bit of discomfort. I believe in that at certain points. But it's also ultimately to inspire collaboration and action, again with a focus on the theme. why insurance matters: prevent, protect, provoke. And so with that, I would like to invite the chair of the IDF Steerco, Michel Lie, to deliver his welcome remarks, and after which we will have the Prime Minister deliver the keynote, and then we will have a conversation with Jonathan, and everyone will have an opportunity for a Q&A, because I know that there are perhaps some pressing questions for each of our guests. So please, Michel, welcome to deliver your remarks.
Thank you, Ekhosuehi. Wow, it's quite impressive. So, dear colleagues, esteemed guests, distinguished delegates, and valued partners, so nice that you are so numerous here with us. It's with an immense pleasure and a sense of shared purpose that I welcome you to the IDF Summit 2024. This year, it also gives me great pleasure to welcome the country delegates who are here this week as part of the World Bank Knowledge Program. We have representatives from ministries of finance and budget from over 35 countries, including Peru, Nepal, Ghana, Somalia, and many other countries who are directly impacted by significant natural catastrophe, significant or potential. Welcome to London and welcome to the IDF Summit. It's a great honor to have you here and a great opportunity to hear from you directly the concerns and challenges you face in this increasingly connected world of rapidly evolving systemic risks. It is also a great opportunity for us to exchange and develop new insight into the challenges and opportunities in developing climate and disaster risk finance and insurance solutions for governments, firms, and households. That said, let us turn to what to expect over the next day or days. We truly have an exciting program ahead of us as we convene under the theme Why Insurance Matters, Prevent, Protect, and Provoke. We are reminded of the pivotal role insurance plays in our collective resilience and prosperity. Reflecting on the progress since last year's summit, we have witnessed remarkable strides in our industry. The insights and initiatives that emerged have not only propelled us forward, but also cemented our commitment to a sustainable and resilient future. This year, our agenda is meticulously crafted to build upon that momentum. We will discuss the societal relevance of insurance and its value in ultimating driving resilience and stability in a changing risk landscape, and its foundational role in prevention and protection. Let us share some of those bold solutions that are being developed and share practical insights, drawing lessons from our experience to inspire and catalyze positive action. As we past convenings, it's also an opportunity to provoke. We need to challenge and explore the growing gap between what stakeholders expect the industry to do and what it is technically able to do. It's nice to have dreams. It's better to make actions. And the bridge between the two is one of the places in which we do see the role of IDF as very, very important, which is probably also forcing the insurance industry to be a little bit more outspoken, what it has been in many, many parts of the world. London may be an exception because of the long history of insurance in this wonderful city. We need to discuss the important role of policymakers and supervisors, regulators, in addressing the complex and rapidly evolving natural catastrophe protection gap landscape. At the same time, let us provoke new thoughts, explore new frontiers, unveil innovative strategies, and that promise to reinforce our collaborative efforts that proactively ensure the value of insurance in ultimately driving resilience and economic stability. I'm particularly excited about the discussion that will unfold during our sessions and our exchanges, including this upcoming one with esteemed leaders like Prime Minister Mottley from Barbados and Jonathan Dixon from the IAIS, whose insights will be invaluable to our deliberations. Let us engage, let us exchange, let us evolve as we navigate the challenges and opportunities ahead. Our collective efforts here will not only shape the future of insurance, but also the very fabric of global resilience. That's at least my deepest hope. So thank you, and I look forward to the fruitful discussion and collaboration that lie ahead. Thank you very much.
Okay, we will now have the keynote by Her Excellency Mia Amor Mottley.
Thank you very much, Ekhosuehi, and to all distinguished guest members of the IDF, and of course, the ministers and deputy ministers. I say a wonderful good evening. I wish I could have been with you, but circumstances made it impossible for me to come. But I think that having established a virtual presence with you in the pandemic, you would appreciate then that I would not want to miss you, and I'm therefore with you virtually. Why insurance matters: prevent, protect, provoke. The truth is that last year, the world reached a staggering 1.45 degrees continuous temperature. The worldwide protection gap in natural catastrophe insurance equally has now reached $368 billion, with approximately 76% of natural catastrophes exposure remaining uninsured, 76%. In high-income countries, 52% of reported economic losses from climate-related events were insured. In developing countries, however, and please remember this, less than 10% of reported economic losses were insured. For some, especially vulnerable countries, this percentage, regrettably, can be as low as 1 to 3%. As the cause for the climate crisis explained, this insurance protection gap is at risk of getting worse. Since 2017, annual insured losses from natural catastrophes such as floods, hurricanes, wildfires, and droughts have averaged, I've been told, over $110 billion, more than twice the $52 billion average of the previous 5 years of 2012 to 2017. An increasing number of insurance companies are withdrawing their cover from regions, particularly those affected by the climate crisis in vulnerable countries. And this is leading, of course, to the spike in premium in other areas. In the absence of insurance coverage, large-scale natural hazards leave vulnerable countries broken, insufficient funds to provide emergency relief to victims, and an incapacity for the partner. Repeated extreme weather events will result in a socioeconomic tipping point, beyond which vulnerable countries simply cannot afford to rebuild after disasters and will fall into a resilience trap. Increasingly fragile, they will be at the mercy of credit rating downgrades and see their access to finance to enhance their resilience to future climate shocks even further curtailed. In other words, they'll be boxed into a corner. My friends, I've said it over and over. What is not insurable is not investable. Uninsurable leads to uncompetitiveness. Uncompetitive means to uninvestable. Closing the protection gap, therefore, maintaining the insurability of vulnerable groups, and building back better in the aftermath of an extreme weather event. These are all essential to prevent countries and people from falling into this resilience financing gap. Numerous governments are now exploring public-private partnerships to preserve the availability and affordability of insurance. In the United Kingdom, where we are meeting today, insurers have threatened to withdraw from continued coverage of approximately 500,000 homes in high-risk areas in the wake of increased flood events between 2005 and 2010. 500,000 homes is almost double the population of Barbados. In response, the industry and government developed in the UK Flood Re in 2016, which reinsures the coverage of high-risk homes, subsidized by a levy of approximately £10 on all UK domestic property insurance policies. In the United States, flood insurance is mandatory in many states and is heavily subsidized by the federal government. My friends, debt stress, climate vulnerable countries can ill afford to finance such schemes on their own. Small and vulnerable economies are particularly at risk. We can lose over 100% of our GDP from natural disasters in a single day. Indeed, in the case of Dominica with Hurricane Maria, they lost 226% in one night. My friends, at 100%, the number is already staggering, so difficult to comprehend. And while the specific impact varies, let us put it in context. A typical war today leads to a 9% decline in GDP per capita relative to the pre-war level. Can you imagine, therefore, a small state facing wipeout risk? Innovation in the provision of insurances will therefore be critical to address this unprecedented challenge to the world economy and the stability of the world. For example, umbrella stop loss capping losses to a percentage of national economies must be put in place and partly financed from the new Global Loss and Damage Fund established last COP28 last year, technically established in Egypt, but financed and capitalized, last year at COP28. Indeed, only today I received a note that the World Bank has accepted that it will be the repository for the trust fund, even though the trust fund's governance will be completely independent of the World Bank. Even with reduced protection gaps, the magnitude of loss and damage suffered will require new forms of concessional finance to build back better. Several proposals have been developed to capitalize the loss and damage fund at scale, including the application of the polluter pays principle either at the jurisdictional level, for example, a levy on cumulative emissions of countries, at the producer's level. We've discussed taxes on profits from the oil and gas industry and others, or on individual consumption, such as wealth taxes as proposed by Brazil. I should say to you that this global solidarity levy with respect to how do we increase the revenue available beyond what is put on the table by public money from states is critical. And that is why Barbados joined Kenya and France to be able to come up with a framework to see how best we can have global solidarity levies that can take the pressure off individual countries, but equally can help us meet the need to create a framework to finance global public goods. I'd like at this stage also to reflect on what Barbados has used as an innovative instrument to be able to help us in the face of uninsurance and underinsurance. I refer specifically, of course, to natural disaster clauses, as we call them, or as the World Bank and the British have now referred to the climate disaster resilience clauses. The reality is that these natural disaster clauses allow us to pause the payment of our debt for 2 years should there be a disaster on a certain trigger, no different from the parametric triggers that we use for payout from the Caribbean facility. Indeed, that natural disaster clause does wonders. It allows us to ensure that those who have lent remain whole so that they need not worry about the risk of default as a result of a natural disaster. But equally, it gives us the fiscal space to be able to meet the needs of the country, particularly given the large numbers of persons who are now uninsured or underinsured. In the case of Barbados, and I'm not really, should we be hit, that will lead to us saving about 20% of GDP within 2 years. There is no government, no entity, no institution that is going to give us that equivalent of 20% of GDP to be able to build back our major disaster. My friends, this is for protecting. But the role of the insurance industry, as you well know, is arguably even more important when it comes to prevention. Although not enough to offset population growth and increase hurricane frequency, improved building codes have been found to reduce losses 20 to 30% in the USA. You may ask why I keep quoting the USA and the UK. It's largely because of an absence of sufficient data in many smaller and developing states, simply because the structures and institutions have not yet been redirected to be able to capture much of this data, and the capacity so to do is now critical if we are to make these examples even more relevant to us. Insurers can incentivize investment in climate resilience, we say, through the terms and conditions of insurance policies. At present, however, policyholders are not consistently rewarded, regrettably, for their risk reduction measures. This is currently available for health insurance, as we see it, and in motor insurance, but not in cat insurance. Global assessment tools and standards enabling insurers to apply premium discounts in a transparent manner to climate resilient structures, such as enhanced roofing construction, have yet to be developed. Barbados has developed a framework called Roofs to Reefs, and we hope that we will be in a position to be able to have our householders benefit from the clear need to be able to tie their roofs down and to ensure that in building them, there is no significant overhang that will allow the wind to easily reach those roofs. Policymakers can and will accelerate efforts to incorporate these resilience investments into the terms of insurance policies. We are looking at it here now, as I just said. Several jurisdictions have already passed legislation that requires insurers to offer discounts to people who make their homes more resilient against natural hazards. In California, I'm told, it is a requirement that insurers give discounts to homeowners who install fire-resistant roofs or make other changes to reduce the risk of wildfires. This is particularly important given the discussion and indeed the decision by many insurers to withdraw from the market with respect to the underwriting of fire risk in California. The expertise in risk assessment, prediction, prevention, product design of the insurance industry will be essential to ensure the success of these regulatory efforts to be introduced by governments, and will be capable of closing the protection gap and ensuring that we preserve insurability in this climate crisis. My friends, the role of industry in provoking change cannot be overstated either. The only long-term option to preserve the insurability of highly vulnerable groups is to reduce emissions. Simple. We must reduce emissions, whether CO2 emissions or methane emissions. Any gap in mitigation efforts will increase the adaptation needs, and any gap in adaptation efforts will increase loss and damage. It is as simple as that, just as day follows night. And insurance companies, therefore, should insure climate risk, not fossil fuels, not in the same way. There is argument that some will support it, that there should be immediately a cessation to the underwriting of new oil and gas exploration and exploitation. Others argue that if you're going to continue to do it, however, that there is need for an adaptation charge, which should be added to the premium of any insurance policy of fossil fuels, and that premium would then be able to help fund adaptation efforts of those economies that have been most affected by the climate crisis. Indeed, the IPCC and the International Energy Agency have concluded that new fossil fuel projects were not compatible with the 1.5 degree target that we need to stay alive. No new fossil fuel projects, however, can go forward without insurance. I'm not sure that that is the answer, because there are countries who command and need the ability to be able to finance their development gaps. Realistically, by 2050, we have a situation where we still anticipate that 20% of the energy needs will come from fossil fuels. So a radical proposal such as no new insurance is probably not appropriate. But if we look at the premium, which can go on top of what is being charged and paid by fossil fuel companies, while the world finds ways of determining how it is going to either one, reduce the scale of fossil fuel exploration, or two, find commercially available decarbonizing technology that will not impact on the climate. While either of those two begin to happen, we need to look at an appropriate premium on top. My friends, The insurance industry has already had restrictions on underwriting coal. Therefore, these issues are not new to them. According to estimates by market intelligence company Insurance, gross direct premiums from the fossil fuel industry increased from 20 billion US to 21.25 billion US in the year 2022. This is not, therefore, an inconsequential amount, and the question is, what is an appropriate level so as not to either break the industry, but at the same time help those countries that are on the front line for crisis that they did not agree. To understand how we can prevent loss and damage, protect people and economies, and provoke change, insurers therefore need to look across their entire business, from their underwriting portfolio to their investment portfolio. And while some insurers have set ambitious long-term climate targets as underwriters and investors, few have articulated short-term business priorities to help them reach these targets. They can work closely with regulators to flesh out these plans and achieve our common goal to preserve a viable insurance market. My friends, I've shared these few ideas with you, not because I believe they answer all the questions, but hopefully in a desire to provoke discussion. Prior to the coming of COVID, we held an insurance colloquium in Barbados in November 2019. We did so because we felt that this is the one area that has the capacity to collapse both the country, the microeconomy, and indeed the financial sector as we know it. Whether we like it or not, the reality is that our people will not get mortgages without insurance. Whether we like it or not, our hotels that need refreshing and refurbishing every few years will not get it unless they have insurance. And if the cost of insurance becomes prohibitive or inaccessible, the financial system as we now know it will not be able to deliver for the citizens of the country or for the homeowners of the country. This is an unsexy area, but believe you me, this is the most critical discussion that the world is now engaged in. We asked for that colloquium in 2019, and COVID took care of the next 3 years. Earlier this year, the Financial Times did a lead article bringing attention, thankfully, of the world to this most critical of issues. The Bridgetown 3.0 seeks to do so as well. And we want to hear from you as insurers how best we can work together to deal with this existential crisis, not only of climate, but potentially of the financial system and the capacity to bring development to our people in the ways that we are not going to do so. I look forward, therefore, to the discussion that will ensue. And I apologize once again for not being able to be in Parliament, to be sorry in London, because I am in Parliament here in Barbados today. And today, ironically, we will be debating the Blue Green Investment Bank, which is intended to be a market maker to ensure that we build resilience among our people and our private sector and our homeowners as fast as possible. Thank you very much.
So thank you very much, Prime Minister. As I said, you are not a novice to this topic, right? You have been with this issue for a very long time, and it is really great to hear you. You said a few thoughts, but it was a lot of thoughts. I think, you know, have given us insights, but importantly also attended to that word of provoke. So really thank you for your reflections. And so with that, I would like to welcome Jonathan and Michel up on stage so that we can proceed with the conversation. So we will start with you, Jonathan. You've heard a lot from the Prime Minister and also Michel, and also with your hat as the Secretary General of the International Association of Insurance Supervisors. I'd like to get your thoughts, obviously, on the summit theme from a supervisory perspective. Then it would also be great to hear from you in terms of offering details on the actions that supervisors are also taking to respond to address some of these natural catastrophe protection gaps, which the Prime Minister and Michel had also spoken about. So Jonathan, your reflections.
Well, great. First of all, thank you. It's fantastic to be here. Good to see yourself, Michel, who was congratulating me on South Africa's victory at the Rugby World Cup earlier. But seriously, on this topic, thank you for this opportunity to speak to you directly. I couldn't agree more with the comments in the opening remarks and the keynote address on the sheer scale of the societal challenge here, and the need for a coordinated response. Finding solutions to these problems is absolutely going to have to be a multi-party joint effort, which is why I'm very pleased to be able to sit here on this stage on behalf of the global insurance supervisory community and talk so unequivocally about the fact that global insurance supervisors are very alert to these challenges and very much want to be part of finding those joint solutions. Now this is, I think, important because it wasn't that long ago that I wouldn't have been able to sit here and say quite such a clear statement. Not that long ago, we would have had members of the IAIS saying, "Not my job. I'm here to protect existing policyholders. Not my job to think about protection of households and businesses that are not policyholders." I'm happy to say that we have, I think, firmly crossed the Rubicon on that one. And you referred to our report that we put out in November, a call to action, the role of insurance supervisors in helping to address natural catastrophe protection gaps. And the report makes it very clear that thinking about how to address these gaps is relevant to all supervisors, regardless of their mandate. Obviously, the actions that supervisors can take within their mandates does depend on their mandate, and those supervisors that do have financial inclusion and market development as part of their mandate have the strongest power to take action. And perhaps I speak to some of the policymakers in this room. If you want your supervisors to take action on this, maybe take a look at their mandates and add those to the mandates of the supervisors. But we also say even those who don't have those market development mandates should be taking action to address these gaps, because they do matter also to policyholder protection and financial stability mandates. So, as you said, the report points out 5 areas where we think supervisors can and should be taking actions to narrow NatCat protection gaps, and gives examples from our membership on what has been done. And interestingly, I was thinking about how these 5 actions actually map to the theme of prevent, protect, and provoke. So firstly, prevent, in the sense that supervisors can firstly help to assess insurance protection gaps. Secondly, they can help to improve consumer financial literacy and risk awareness to promote prevention. And thirdly, they can actually incentivize risk prevention, maybe even in some cases require risk prevention and reduction of insurance losses to be a feature of insurance products. On protect, in the sense of creating an enabling regulatory and supervisory environment to support availability of insurance and the take-up of coverage. And I think provoke, in the sense of actually supervisors potentially being advocates for this topic, and advising governments, policymakers, including on the design and implementation of public-private partnership solutions as well. So that's where we are. It's a very interesting topic. I think it's really about the nexus between supervisory mandates and broader public policy, which means we do need to work together on this, and it's fantastic to hear that we have so many policymakers in the room, because this is a big policy issue with a capital P that supervisors want to work with policymakers on as well. The last comment I wanted to make is just to reflect that, yes, we had a report we put out in November, but this report is also intended to be a catalyst for concrete action, some of which we're discussing with the IDF, which is fantastic. But also, this is a topic that is going to continue to be a key focus of the IAIS over the coming years, because we actually have just finalized our strategic plan for 2025 to 2029, and we have agreed that one of the 3 strategic focus areas for the IAIS in that 5-year period is around the role of supervisors in supporting the insurance sector to play its key role in promoting societal resilience. So this is very much to this question of how can supervisors support our collective efforts in this space. Thanks.
Thank you very much, Jonathan, for those reflections. But it also, as you alluded to, it points to a little bit of an evolution in the role of supervisors, right? And an expansion of a mandate. And one of the questions that has also struck me is, with this evolution of a mandate also begs the question of the capabilities of the supervisory community to actually service the broader public need when we think about this issue and concerns that you raised around stability, the need of consumers, the need of the markets, etc. You deal with a community that's quite diverse in that sense, right? So what are your views in terms of building out that capability also, if we are to actually effectively address this issue?
Yeah, I mean, it remains a challenge. I mean, we have, of course, the expertise and resources for supervisors to play their part in these joint solutions does vary across jurisdictions. We do have examples that we refer to in the report of very sort of proactive, active supervisors in this space, where they've been able to contribute expertise and tools and experience to this collective effort. So, for example, we've talked about the work that's happening in Europe with IOPA on the natural catastrophe dashboard that they've developed, which helps to bring together data on economic and insured losses and risk estimates and gaps for different types of perils, which I think has been a great help. In the US, the NAIC and FIO are now partnering on developing a similar dashboard. NAIC is developing a catastrophe modeling central hub of expertise. So there are examples where that expertise does exist. But on the other hand, we have a large number of our members, particularly those from emerging markets and developing economies, where they still need to gain that expertise and that capacity. So that is also a big focus of the IAIS at the moment, to help build that capacity. And we will be working with partners on that, including the Access to Insurance Initiative. But more broadly, we'll be partnering with others like the IDF, like the World Bank, like the event that was earlier today for policymakers, and bringing supervisors along that journey as well. So we're trying to assist our members to obtain those insights, build that expertise. So, for instance, in the modeling side, where we're working with supervisors, and we've talked about this, where the IDF's work might be useful there as well. To build that expertise, we are looking at the IAIS providing a sort of public good around risk modeling and data availability to help supervisors, first of all, understand the scale of the challenge as a very key, important first step to actually taking steps to address it.
So a final question before I turn to Michel is, so do you have any recommendations or a call to action to the insurance industry, given some of the views expressed by the Prime Minister in terms of, access to availability of insurance, importance of markets, etc.? What is your call to action to the industry around this topic?
Yeah, I think the call to action from a supervisory body perspective is let's get everybody around the table in addressing this, including insurance supervisors. I mean, we continue to have conversations around how do we best address this. There was a lot of mention of public-private partnerships. I think this is an area of focus for us as well going forward. I did want to mention the work that's recently been done with the G7 under the Italian presidency, where we were able to contribute our expertise from the IAIS side together with the OECD on advising on the development of a high-level framework around public-private insurance programs. Now, if you look at that framework, I think what is interesting to take from that is I suppose, a lesson that you won't necessarily jump to this as the first solution to dealing with the protection gap challenge. There are certain initial steps that a jurisdiction should go through before that. So assessment and understanding of the problem is a big part of that, and that does have to, I think, be a collective effort. Secondly, and we heard it from Her Excellency, really this emphasis on risk prevention and reducing insured losses. And I think maybe there's a lot of energy that should go into that particular aspect. And I think we want to discuss amongst supervisors how we can work with the industry to best incentivize that and make sure that is integrated into any approach to this challenge. And then, of course, then taking a step-by-step approach and thinking, okay, what are we left with in terms of what is truly uninsurable, where we need to look at perhaps a public-private partnership arrangement. Thanks.
Thank you very much, Jonathan. I will now turn to you, Michel. We've heard it, as climate risk rises, how will you balance the increased demand for protection from clients with the reduced appetite of shareholders and some regulators to be exposed to these risks? So how do you view this complex issue that we are dealing with, the looming threat of insurability as was expressed? How are you viewing this from an industry perspective?
Well, there are two answers to your question. The first, which would be the naive and the most stupid one, would be as long as it runs, we can take advantage, we increase the premium as much as they are needed, and when you cannot insure that anymore, that's over, the game is over, but we are full of cash. Stupid answer, I insist, stupid answer. Meaning that there is a moment in which we cannot look at that by simply adapting prices. We definitively need to share with a lot of the actors the knowledge that we have about the risk and the knowledge that we have about the potential solution in which we can slowly control them a little bit better. And that's the point in which we should take advantage of the situation that we have as an industry. We have a foot within the financial service industry, but we have also a foot which is definitively in the risk portion of the human activity. And I think that must be one of the contributions of the insurance industry in order to make sure that we do not follow this crazy cycle of simply following the premium, by the premium, the claims intensity that we had previously. We need to make people aware of the growing risks that are happening. And there I must say that probably I don't worry, my dear Ekhosuehi, I won't repeat the story of the famous World Insurance beside the World Bank, but I think that there is a level of conversation between government and insurance industry which is not intense enough. And I don't, and again, I respect massively the politician. That's a very difficult task, especially in the current environment. But I do believe that there is an intense interest in the insurance industry for the asset that we manage. And there is probably a limited understanding of the liability that we manage. And that's the point in which we need definitively to intensify the discussion. And again, I will dare to say something which can be semi-politically correct, is that on some of the long-term challenge, and climate is unfortunately not the only one. You can take the pension issue that we have in evolved economy. The democratically elected time perspective of a government is not necessarily the same as the one of an insurer which is looking at trying to establish the long term. And I think these are the point in which we need to intensify the discussions. Because we need to make sure that we do not fall in a world which is uninsurable. And if we continue like that, to be honest, there are some risks. So it's not only because we solve the problem of the next re-election in some countries 4 or 5 or 6 years that we have solved the issue. And this kind of challenge of forcing people to address very long-term aspects which are probably partly disconnected from the political rhythm is an interesting challenge for the insurance industry, which is probably the most interesting challenge for an industry which has been extremely discreet, too discreet. Result is that we have, in the majority of the country, regulators which have been merged between the banking and the insurance, which doesn't make full sense because there are two industries which are quite different. But I think that we need to make everything possible in order to make sure that the industry, the insurance industry, and the people who are in charge of the countries, the politicians definitively, exchange a little bit more in order to make sure that we work together on the resilience of this planet. There's no plan B, and even a mathematician or an actuary working in an insurance company knows that. There is no planet B.
So concretely, what do you think are the biggest things that the industry can do to address this issue of climate change and that issue of the climate crisis and this issue around insurance availability? Because I'm hearing you say collaboration, etc. What concretely do you see as the biggest levers of change?
Well, simply express with the major credibility that you have the price of the decision that you take and that you don't take. And there I move directly to the Provoke part. If you're convinced that definitively without any decision taken, you are evolving in a situation in which part of this planet will be totally disconnected from any kind of potential insurability, the worst place is that actually part of this planet will move away from any kind of insurability even before taking advantage of any part of insurability, because that's the part of the planet which is not insured at all. You know? So I think the transparency about the price to be paid for decisions which are not taken need to be increased. You can, and there I take the burden of being probably as an industry a little bit too discreet and too nice, instead of putting on the front, even if, to be honest, the majority of the reinsurance industry especially, but also the insurance industry, has been extremely outspoken about this price of not taking decision for the last 30 to 40 years. So, you know, a part of that, we are not the rules maker. We cannot save the world from itself, if I may say. We can simply insist on the fact that if things are not happening quickly, where they need to happen, we are running a big risk. And if uninsurability is the only weapon that we can put on the table to let people understand that things need to change, well, we will have probably sometimes to put it on the table. It is becoming uninsurable.
So that takes me to Prime Minister. Maybe for you, you would have heard Michel's view in terms of the price that is paid when political decisions are not taken, right? And I think it would be great to get your reflections, because we're talking about an issue where it's about long-term you know, markets that have to be built, systems that have to be built in order to better manage risk, to identify risk, manage it proactively. And that doesn't always reconcile with the political cycle, if you could put it that way, right? So I guess it would be good to get your reflections, because you've also been at the center of a lot of the global policy conversations around climate, finance, resilience, risk management, insurability. How do we bridge this tension, right, that exists between sometimes a lack of a political decision, which also has an impact in terms of how the industry can also drive progress as it relates to risk management?
I think that it is absolutely clear, as was said just now, that the time for conversation is upon us. And unless there is deep conversation between the insurance industry, 2, the regulatory bodies, but 3, the political class, together in the same room, where we literally put on the table what are the concerns, how do we believe that we will be able to deconstruct and reconstruct in order to ensure that there is, as far as possible, a win-win for consumers, for businesses, for the insurance sector, and for the country as a whole. I don't know of any financial system that functions efficiently that does not depend on insurance as a guarantor with respect to the deal that is done between those who are lending and those who are borrowing. But when probability and possibility start to become certainty, we have a problem. And you guys will be the ones that tell me first off that you can't sustain the model because it is impossible. That is why I am perplexed as to why it has taken so long for the natural disaster clauses to get off the ground. Because quite frankly, in a crisis or post-crisis, it is the government that has to come in. And whether it was the financial crisis of 2008 or whether it is a natural disaster crisis, it is the government more often than not that is asked to come in and to literally shoulder the weight that has to be shouldered in terms of the losses if we are to avoid and avert the kinds of depressions that we saw 100 years ago that literally led us ultimately back into a world war. So it's too easy for us to sit down and speak. And as I keep saying, unless you know of a plan that somebody has for us to go on Mars, and I can't add Pluto anymore because that's no longer a planet, then I think we need to get into a conversation as fast as possible. And that's why, even in spite of my not being able to travel, that I've agreed to be here in this forum, because I think that the conversation has to be as broad as possible, especially given the fiscal crises that invariably most of the developed world, the North Atlantic countries, are facing. The IMF has said, look, you guys are running deficits that are out of control, and unless you start to bring things back into play to normal levels, we're going to have problems. But how are you going to bring things back into normal levels when the US had more tornadoes this year, the second highest tornadoes ever in the history, and they may still exceed that number 2 ranking this year? How are you going to do it when India is recording 55.2 degrees 2 weeks ago, and we are likely to have a monsoon season and floods that will take away more lives and more people than normal? So I really feel conversation, we're running out of time. And I'm glad to hear just now the comments that politicians and the industry need to sit down at the table, and I say the regulators too, and let us come up with a framework that can boost resilience at one end, pass the legislation to incentivize behavior at the level of the populations, as I referred to, but at the same time, look at novel mechanisms such as the natural disaster clauses that can help us while we bridge the gap for that change in behavior to take place and for the adaptation measures to boost resilience, particularly with respect to infrastructure and coastal resilience, are completed.
Thank you, Prime Minister. Michel, I knew you wanted to make a comment.
I just want not to put all the governments in the same basket, if you don't mind. I think that there is definitively, insurance is based on a type of solidarity, and there is definitively a certain tension between probably the North and the South. What I'm a little bit afraid when you speak about the insurance industry, and we've seen that, there is this intense debate about loss and damage. And sometimes I suspect that insurance is placed in the middle of this debate as a kind of way to escape some of the key questions on which we cannot contribute, because loss and damage is definitively, okay, how much does one side has to put on the table because of what has been done in the past. Insurance is not part of that. But sometimes I suspect that insurance probably is suffering from the image of a technology which is brought very often by the North to replace cash by a nice idea. And it's not insurance. Insurance is a multiplicator of cash, which simply transforms 1 in 10 if something happens. And that's precisely one of the key elements that we need also to address, that so many things are happening after the facts instead of letting them happen before the facts, in matters of preventing, but also if you cannot prevent, in matters of insure, because the amount will be multiplied by 10. It's very nicely proven, but we still have 95% of the money coming after climate-related events, after the events. And it's incredible. It's so illogical. So I'm just wondering why. And to be honest, I don't have any answer, apart maybe the fact that we are too shy as an industry and we have not institutionalized conversation with the politician. So that's my key priority. We need to make sure that that happens as intensively as it happens between the government and the banks.
Can I invite Ekhosuehi? You're in a perfect position. Can we try, you know, I say I'm a Jimmy Cliff girl. You can get it if you really want, but you must try and try. You'll succeed at last. Can we offer to host a colloquium again where we bring key players, key political players to the table in order to be able to get the consensus going between the industry and the politicians and the regulators? I'm more than happy for us to host it in Barbados. But I think that without that, we are spinning top in mud and we are risking a lot more than we should be risking, given what we know and what we ought to know.
So, Prime Minister, I will say I will do my best to make that happen. I doubt that we will have people
and we will at the political end too.
Yes.
So I'm not putting it all on you.
Yes, yes. A point well taken, Prime Minister, and it is one that we will take up. It's a challenge because I think it is a conversation, building on what the remarks from Jonathan, building on the remarks from Michel. We also know about the incredible work that you are doing with the Bridgetown Initiative, and we've seen the acceleration of the conversation at the global policy level. So certainly, Prime Minister, we would welcome the opportunity to do that. So a conversation for the IDF and this community to see how we take that forward. I am conscious of time and the fact that we promised some time on the agenda for question and answer with this incredible audience. So I will now like to give the audience a chance to raise specific questions that you might want to raise with any of our excellent speakers. Not only on some of the topics today, maybe there are other related topics you might also want to bring to the fore. But the floor is yours if you have any pressing questions. And please don't tell me that you are shy. Yes. We have a and if you can identify yourself, yes. And then you can.
Yoshikawai, I'm chairing OECD and CDRIF as well as GIP. So question is, Michel, you know, you have mentioned everybody or many people understand ex ante is much better than ex post. And it's, as you said, 10 times more cost efficient, but people do not do it. Government, even individuals, household, and so on. And this is a fundamental challenge, what the insurance is. But definitely, you know, this is a key theme that we have to find a solution, particularly this, you know, global climate challenge and so on. Just this is, I don't know, how do we address this? Ex ante is much, much better than ex post, but how we can make it aware to everybody in the society, including politicians, and to take action? I would like to appreciate your comment.
Thank you for this very easy question, my dear Yoshi. I must say that it is moving. It is moving very, very slowly. We are human. In front of drama, in front of crying children without their parents, in front of destroyed city, the money flows. If you explain that as an actuary that there is a solution to make the money flowing before, much more than that, it's probably a little bit less exciting. So I think we need to make of the example which have been happening a large publicity, and it's terrible because you make publicity about the drama. But if you can probably argue in a Cartesian way about the added value from a financial standpoint without neglecting the limitation of the financial contribution compared to the humanitarian aspect of the few cases in which companies or countries have been taking the advantage of insurance, I do believe that we can slowly moving the needle. We need to advertise definitively the success, even if they are very rare at the beginning. Without doing that, it will never happen. I don't think so.
Are there any other questions?
Yeah, thank you very much. My name is Herbert Asimwe, and I come from the government of Rwanda. I work for the Ministry of Finance. I just want, it's just an echo and a vote of thanks for the executives for passionately, speaking about this topic. But most, my vote of thanks go to the Prime Minister for her commitment to engage governments to really speak about the protection gap and the risks that we have, and the commitment to go and push governments to really understand and cover these risks. Thank you very much.
Okay, thank you very much.
Tendency to speak about protection gap, and we always look about what is happening in the south. We have enormous protection gap also in our continents, about pensions, about life coverage and things like that. Protection gap is a general sickness everywhere, and it's not reducing; it's growing. So yeah, again, I do believe that advertising the positive effect when things are going rightly is probably the best way to address that.
Okay, so I think there's a remark, Prime Minister, that you wanted to make.
No, I'm fine. I was just once again reinforcing that I do think that this conversation is critical. Ironically, my minister in the Ministry of Finance has walked in the room, so I'm going to give him the responsibility to be able to ensure that we can pull together this colloquium with you. I started speaking with the credit rating agencies last week. We had the whole board of Fitch here, ironically. And I really think that the two major entities that we're not, well, three, we're not speaking sufficiently, one, to the insurance industry, two, to the credit rating agencies, and three, to those in the various markets, be it Wall Street or wherever else. And I don't understand how we can do so when the climate crisis is an existential crisis. And the reality is, as I said, there are those who would like to see no new fossil fuel. There are those who would like to see, okay, you can have fossil fuel with decarbonizing commercial technology, decarbonizing technology at commercial scale. But how are we going to know which one we're going to do if we don't sit down in a room and talk with each other? So, I mean, maybe it's a little too basic for me and over my head and over my pay grade.
I don't think so, Prime Minister. I think there's one more question. Yes.
I'm Butch Bakani from the UN Environment Program. I think the Prime Minister articulated it very well, the concept of loss and damage and adaptation and mitigation, and basically saying that the only way to reduce loss and damage is really to close the adaptation gap and close the emissions gap. So on the Provoke part, it seems like the industry has a role that has been articulated on adaptation. What is the role of the industry on reducing emissions?
So, Michel.
Well, it's definitively, first we can start with ourselves, and we introduced in our compensation package a target which is related to emission. You may say ridiculous, in insurance company. What kind of emission do you have? We travel like mad. You cannot imagine. So traveling a little bit less is something. And we are definitively, and we will publish during this year, a transition plan on which we express absolutely clearly what we expect from the large industry in some of the famous emission area, and the condition that we want to express in order to continue insuring them. We have difficulty with this transition plan because it's probably seen very often as a kind of argument not to intervene immediately. I do not believe that eliminating all this industry from our portfolio immediately would save the planet, but I do believe that establishing absolutely clear conditions, maybe for 3 years or for 4 years, but not more than that, to tell that if that doesn't happen in the next 3 to 4 years, you forget about our cover. And I suspect that they will find insurers covering them, but that's what we want to do as a company in order to make sure that definitively things are evolving in the right direction. And in the majority of the case, I must say large corporations do follow that. I think one of the key issues that we are facing now in the famous ESG story, which never ever anybody mentioned anymore for the last 2 years, which is quite surprising, is that we've neglected a little bit too much the S. And because of that, we are probably facing some of the political issue that we face in some countries. But a clear transition plan is absolutely there, but we don't want to say from one day to the other, no, because I don't think it makes a lot of sense.
Okay. So I see more hands going up, so we will just take 2 more questions before going to closing statements.
Thank you. My name is Noam Unger. I'm from Washington, D.C. at the Center for Strategic and International Studies. And my question is almost the last one in reverse. To what extent, if any, do you think the conversation is clouded by all falling under this rubric of climate, both the mitigation side and decarbonization issues and industrial and societal transformation on that front, and the necessary conversation around economic security, economic impacts, and interoperability on the adaptation and resilience side? And is there a need to just be extremely clear which conversation we're having at which point in time, and which policymakers? When we say we want to convene with the political leaders, the ones who are leading on climate globally tend to be consumed by the mitigation conversation for understandable reasons, because they have not made enough progress over decades. But many of them view conversations around adaptation and resilience as being defeatist or distracting. And how do you get past that? Thank you.
We'll take the second
I
question.
want to jump in.
Okay.
I want to jump in, because the truth is that to separate climate from development is as useless as separating mitigation from adaptation. The only thing I'd like to separate out of that equation is loss and damage, because we should all be working to avoid it. The reality is that the mitigation efforts we maintain are global. Mitigation can take place any part of the planet. And it is a sad thing that those who have the capacity have not pursued mitigation more aggressively. And that's why we call for a global agreement on methane, because quite frankly, methane, the containment of methane has the capacity, more than even the capturing of carbon, to be able to help us meet the targets that we need to meet at a quicker rate. But for us, we're at the adaptation and resilience level, because when you are a small player, you realize that nobody's taking the action that they need to take at the scale that they need to take. You better get your act in order and get your resilience and up and building. That's why my cabinet last week approved a National Investment Resilience Plan, because we feel we have a date with destiny that is a decade away. Now, I'd like to believe that that can be slowed down considerably by us taking mitigation seriously, and by those across the global community, be they financial institutions or be they countries or whoever, take the actions that can help mitigate against the increases that we are seeing, because we are not seeing the slowdown. And if you listen to the Secretary General last week in his speech at the Natural History Museum, the truth is that 2030 is going to look a lot darker and a lot hotter. We have now had, for the first time, 12 straight months of breaking records. I call it the season of superlatives. And if we feel that we are going to bet against it stopping, that bet has to be buttressed by action and not talk.
Thank you. Okay, so this is the final question, and then we will turn to some final remarks.
Thank you, ma'am. My name is Nadeem Hassan, and I'm from Pakistan, and presently I'm working with the Ministry of Finance in Pakistan. Let me start with an observation and then followed by a question, that the Honorable Prime Minister has touched some very sensitive chords in this, during that eloquent conversation. As we all know that few years ago, the world started with the climate finance issue, that we need to generate resources to mitigate and to help the developing nations. And somehow conferences were made, conferences were called, commitments were made, but those commitments were never met. And those commitments were never fulfilled. Now, another slogan of insurance is just, is being raised. Nobody can undermine the importance of insurance. But my point is, I personally feel, I may be wrong, that now under the garb of this insurance thing, we are just trying to camouflage the climate finance factor, and this is probably going to be a new colonialism where the poor nations and the developing nations are going to be robbed under the garb of and the slogan of something like to cope with the climate issue. So this is probably my observation. This is my question too. That this is a new form of this insurance is a new form of new colonialism.
Okay. Well, that's an interesting comment. I think part of the conversation that we've been having today is really trying to look at how can we use the capabilities within the industry to address many of the challenges that we see. I think part of the reflections from the Prime Minister and also Michel as well as Jonathan was this concern, and in many countries, your country, Pakistan, a concern around climate change and its impact on communities, on governments, and the need to deepen an understanding of what those impacts translate to for governments and what they translate to in terms of impact on households. Part of what we are trying to do through this convening is really to explore how can the capabilities within the industry be used to better understand these risks, but also develop the kinds of solutions that are needed. It is also, and I think an important point to emphasize, that we are not saying that insurance is a solution to everything, right? But how can you use the capabilities in the industry, working with other types of solutions? The Prime Minister referenced debt clauses. There are other kinds of instruments around. That is actually what we need. It's collaboration, it's conversation, but it's also a focus on developing new solutions given the scale of the crisis that we are trying to deal with. So I hope that that addresses some of your concerns, but I think it also, I think, if we are frank, reflects some of the frustrations within the climate space around a lack of delivery on climate finance for these countries. And part of this effort is to try to break some of those conversations in a much more constructive way in terms of really honing in on what the problem is, but importantly, what those solutions are. So I will now turn to speakers for final remarks, and not only in terms of the summit theme, but I would like to switch it up a little bit, maybe in a more optimistic sense. What gives you hope, given all that we have discussed, some of the frustration that has just been expressed? What gives you hope? And what is your call to action that you want this audience to walk away with when they leave this room, when we have our conversations tomorrow, and when we go forward? Perhaps starting with you, Jonathan, and then you, Michel, and then Prime Minister.
Well, I don't know if it's a closing thought. It's just a reflection as I was sitting here, and in my life, my history, so 7 years now with the IAIS. Before that, 10 years in insurance supervision. Before that, 10 years with the Ministry of Finance in South Africa. So I guess I've been on the Treasury and the supervisor side. In all that time, I think this conversation also reflects that. So much focus when I was at the Treasury around social expenditure, development, but where was the risk conversation? And you know, maybe South Africa's different, but I feel in a lot of governments, a lot of policy-making discussions, the risk management aspects. There's no CRO, government CRO, where the risk management discussions are sometimes missing, and I think that's the key point here. We all need to be around the table and converting conversations into action on these key topics of risk management. And you know, the insurance industry it's in the business of risk management. It understands risk. Why not have them at the table to find those? It's not just about a risk sharing. It's about risk prevention, risk mitigation. That's the conversation that really matters. And I think the same. Supervisors have experience in risk management issues as well. Get the people you need around the table to chart a joint way forward would be my sort of closing message.
Michel?
Well, I can only insist on that. You know, even the insurance industry took something like 2-3 centuries to invent the role of a chief risk officer. So we can be a little bit patient about what could happen in politics, but I think it can happen, and that's definitely a dimension which is, in my way, missing a little bit by the organization of many governments. I must say as a conclusion that, I don't know if it's positive or negative, but the combination of this big challenge and this special phase that humanity is facing because of this complotism and things like that is probably bringing us away from pure technical discussion, which are deeply needed in order to speak about what we have to speak about. I must say the climate debate is becoming so stupidly religious that at the end, do you believe in this one or in this one? Is not. We can discuss about that with numbers. You know, actuaries are sometimes boring, but to be honest, in this case, I would prefer a mathematical discussion than a religious one, because it would come to an end. It would come to a demonstration. And that's probably the combination of the two stories is a little bit negative, and my hope is that definitively that can only last for a certain time, and then there will be a moment in which we will stop the religious discussion and we will discuss about what matters.
Thank you, Michel. Prime Minister, your final reflections?
I was actually going to cede my time to the two gentlemen, given how much time I'd had. But quite frankly, I think that we are seeing movement. Our problem is with speed and scope. And in order for us to be able to increase our speed, increase our scope, then a number of the things that we've discussed here have the potential for helping us. I like the idea of the risk management, risk prevention, etc. And I think that it is certainly something that we will, at the domestic level, try to expand on significantly. We've tried in our own ways with the preventive measures that we want to be able to get individual households, individual companies to be able to take more proactive action. This is not going to be won simply by preaching, and I hear you on the religious point, although I do believe that it is still not yet being taken sufficiently serious by sufficient numbers of people globally. When that starts to happen, then I think we can have a constructive discussion, and I'm hopeful that it will, not driven so much by the advocacy and the persuasiveness of our arguments, but regrettably by the events that are highly unusual that we are seeing in the season of superlatives. So let's get on board and let's start to change, as we have done at every stage of humanity, to get ahead of the problems that can literally make us extinct and make the planet unlivable. I am hopeful.
Great. Thank you, Prime Minister. Thank you, Michel. And thank you, Jonathan Dixon. Thank you. I have to say, you all fulfilled the brief, right? Because when we started this conversation, as I said, it was with the expectation that it would be thoughtful and it would be nuanced. There would be some discomfort, but there's also very much a focus on what do we do in terms of action and taking this into the future. So I really want to thank you for your contributions to the conversation. I obviously want to thank the entire audience for sticking through with us on this journey, because I know that you could be somewhere else, but you've chosen to spend the time with us this evening. And then just to say finally, thank you to the teams who have done an incredible job behind the scenes with the Secretariat and others, the operating committee, steering committee members to make this event happen. This is just the opening ceremony. We have a full day tomorrow where we start to delve into these topics in a much deeper way. So again, just thank you for your engagement, your presence, your thoughtfulness, in terms of thinking through this, but also investment in taking actions forward. And so with that, I would like to say, well, welcome to the IDF 2024 Summit. Prevent, why insurance matters. Prevent, protect, provoke. With that, so there is one more request. We would like to do the group photo. So I would like to encourage those of you who are sitting up there to come down a little closer to us. I think the photographer will be here, and we will just stand in our seats so that we have a photo that, we'll go there, yes.
Yep, sorry. Please don't be shy at the back. Come down forwards and fill the rows, please. Please come. Yeah.
If everybody could move in front of the pillars,
That would be brilliant. Sorry.
Sorry. Sorry.
But I'm cajoling. Thank you. Consider yourself cajoled. Sorry. Please come down. Sorry, the mic went off. Sorry. You go on the photos. No. I'm the staff. I'll hide. I'm hiding. Oh.
The two people at the very back. Just turn around. I might not see you. I apologise in advance. You might need to come in a bit tighter on that edge as well. Just come in. Okay. And sir, just come in a bit tighter for me. Okay, sir, you just need to come. No, just come. Just get to know your neighbour. Okay, lovely. Okay, everyone's smiling. I can see a couple that are not. Might turn the flash on that normally. Oh, we've got some white light. That's amazing. Okay, here we go. This is massively helpful. Big smiles, guys. And again, last two. Keeping you from food. I'm just going to make sure you're in there. Well, there's somebody at the back not smiling. Right there. Here we go. Big smiles. Here we go. Lovely. Keep going. That is superb. Relax. Thank you very much.